And we are coming to you live from social distancing headquarters. It's the only way to do it. We've got Heidi on. She is at home. I did come into the office. It's the only place we can get fast enough connection to have her on a Zoom meeting with us and also be streaming live. So for everybody out there listening, we want to make sure that you guys know that you are more than welcome to put your questions into the feed. We'd love to hear from you, and we want to answer those questions for you. So before we get too far, yesterday we had some issues with sound. Manny, do you want to go ahead and pull up YouTube right now and make sure we've got some sound?
Trying.
All right, perfect. And I am going to close my Outlook so that we don't keep getting buzzed throughout the entire show. So welcome to Mortgage Mom Radio. Thank you so much, Erica, for watching. Hello. And hey, give us a big thumbs up if you can hear us. We want to make sure everything is working right today. And again, anybody that has any questions whatsoever, please feel free to reach out. If you guys are listening to us on Saturday and you're listening from radio, we want you to know that you can watch us live every Wednesday at 5. That is 5 p.m. our time. And we want you guys to ask us your questions. Get those into the feed and let us answer those for you. So how do you guys do that? Well, you go to YouTube and you look for Mortgage Mom Radio. Hit that subscribe button and turn on your notifications. It will let you know when we are live and we are recording. So today is going to be a very big show. We have so many changes that have happened in the mortgage world, from loan to values changing, people asking us about whether or not they should make their payments, defer their payments, what happens when they do that. We do have Lori on. Thank you so much for watching. We appreciate that. But we've got a big show, lots of changes here in the mortgage world. The first thing that we get over and over again, and we've had over this last, I'd say, week to 10 days, is, should I refinance? Are interest rates low? We talked a little bit a couple weeks back. We couldn't get on last week because we couldn't figure out how to do this whole social distancing and get the show done. But one of the most common questions right now is, should I refinance? And are interest rates zero? So, Heidi, what do you got to say about that?
I really wish they were zero. Of course, you and I would never be able to sleep or eat or breathe. But no, they're not zero. And you know what? The market's so volatile right now. They go up, they go down, they're all over the place. I guess it depends on when you call as to what your rate is, depends on what your loan is. As we always say, everyone's an individual. So yeah, rates are low. Then rates are high. Then rates are low. Then rates start flattening out. So yeah, it's a loaded question, Deb.
It is. It's all over the board right now. It just depends on when you catch it, what's going on that day. There's a giant pipeline of loans from people that did catch those rates at their very bottom tier. And, a lot of the mortgage banks and big banks are struggling through that volume to try to make sure that they are getting those funded. They're getting them delivered to the investors. They're getting those loans sold off of their books to be able to fund the next set of loans. And so depending on, what is going on in the market and in the industry, things are slowing down. One company may artificially increase interest rates to try to slow down production to get themselves a little bit caught up, while another bank maybe has a little space, so they open up the flow, and then all of a sudden things start coming through. So the most important thing that you can do right now is, number one, make sure that you are shopping for your rate. Make sure that you are checking to see who has the best rates so that you are getting into the right loan at the right time. The other thing that we're hearing a lot right now is locking your rate. So, it's very important to lock in a rate when you hear the rate that you really want. But the one thing that I do want to focus on is that right now you're probably not going to hear the rate that you want. Interest rates are not nearly as low as where you think that they are. They're not nearly as low as where they were. There are a lot of investors right now that are pulling out of the mortgage world. They're taking their money out of the bond and the mortgage-backed securities market and the treasuries. And they're literally just holding on to their money. They're pulling it out of the stock market. They're pulling it out of everywhere, and it's fear. They're scared. What is going to happen to my money? Am I going to get my return on my investment? So even though the federal government has come in and said we're going to buy $3 trillion in mortgage-backed securities, which should actually, in our favor, bring those interest rates down, it's not enough. it's not enough for the amount of people that are pulling money out of those treasury markets. So we're actually seeing, in turn, interest rates go higher rather than go lower. We haven't, I'd say Monday this week was probably the best rates we've had in about a week and a half before that. And then they went right back up again. So you've got to get your application in. Right now, I am suggesting to all of my clients that we get the application in. We get the appraisal ordered, we get the loan approved, and we literally sit and we wait to lock in that rate when we get to a rate that you are comfortable with. Be prepared to be in that transaction for 60, 90 days. Not because we couldn't close you sooner, but because we're trying to work for you to get you the very best rate possible. That's the most important piece. If you're not in any hurry whatsoever to get it done, there is no reason why we can't have that patience. That patience is going to pay off. We are seeing written all over the board by every person out there that is, talking about our rate's going to get better, our rate's going to come back down. And when things do start to calm down and people are getting back to work, there is across the board, the financial analysts are saying that they're anticipating that rates will come back down again. And when they do come back down, if you don't have that application in, if you don't have all of your documents in, your loan is not approved, your appraisal is not finished, you're going to get stuck with the rest of the people where they're at right now today, trying to jump in at the end, and then you're not going to be able to get locked in. So I know, Heidi, you've been watching us do this now for the last, I would say March 9th is really, it started at the beginning of March. Rates really started to drop end of April, beginning of March. March 9th, we got a 4-hour window to lock people in at the lowest rates that we've seen. And then from there, it's been just an absolute crazy roller coaster. So Heidi, why don't you give your opinion on what I was just talking about?
Yeah, a lot of times will get the call after someone spoke to you and then they were kind of hemming and hawing, or we've been asking for documents and they heard rates dropped, right? Now they want to lock it in immediately, but they haven't even done their application, or they did it. I've been talking to them, asking them to get their documents in so we can get them underwritten, credit approved, get their appraisal ordered. We can't lock them in. We cannot do that until they get their stuff. And then sometimes there's an hour window, 4 hours. But we have so many loans in the process, and we're not the only ones. Everyone is jumping on that bandwagon. But if you wait until you hear that rate lock you love, you have to have, you want it, you don't know how long you have that time.
Right.
So, it's hard. If you wait, you may have waited too long.
Right.
And you might lose that opportunity, and then you might have to wait again.
Absolutely.
And it could be a day, 2 days, 60 days, 30 days. We don't know. So I think you're absolutely right. People have got to give us a call, get your loan in, get your information in, and be patient. And I'll tell you, in this day and age, we are really learning some patience again.
We are all learning a lot of patience. One of the questions that came in from Lori, she asked, who pushes the rate lock button, or who pushes the loan rate button, each bank, ? So when we are locking in your loan, your rate lock is based on your loan officer. Your loan officer has control of that. I've got a little switch on my finger that goes choo-choo and it locks in the rate. But I can't lock in a rate unless I have a completed application. All of the loan documents are put together. We've been submitted to underwriting. The loan is approved. We've got to make sure that you're in the process of moving forward in order to lock that rate. So it's something that has to be done. It's not something that day rates drop and your loan officer can call you and say, hurry, get your application in. You're not, there isn't enough time for that. So you definitely need to make sure that you get your paperwork started now. A lot of those clients that we did lock on March the 9th, we're just getting to the point right now where we're almost cleared to close. We're getting ready to get their loan documents out, get them funded. And that was because those people were in process with us already. We had already started the application. We had already gathered their loan documents. The majority of the time, we'd already, forwarded their loans into underwriting. And so now we're there. So March 15th, March 20th, just started getting the loan application started. Those interest rates were still pretty good at that point. I'm not saying that rates aren't good right now. If you have an interest rate that's over 4%, we can still get you into a really great deal. But are we going to get you at 3% or 3.25% like we were 2-3 weeks back? No. So, the ones that are waiting for those 3s and 3.25s to come back, have patience. It may not ever come back, and that is a possibility. But there's also a very good possibility based on what we're hearing that they will come back, and that we're probably looking at 30 to 60 days out for that to happen. other clients that are looking for cash out and they really needed to get their money. We've started their process the 15th or the 20th of March, and they're probably a 45 days out because they got in behind the herd instead of in front of the herd. So if we can get you at the front of that line, we're going to get you on that roller coaster and rolling around, on that ride you've never ridden before. You're going to get to experience it first, and you're going to get to close first. So I hope that kind of makes sense, right? Very, very important. A lot of other things that are changing right now are guidelines, and we're seeing these changes rapidly. And so that is something that I do want to touch on, and I want to make sure that you guys are all aware of. I also want everybody listening to know, number one, you could put your questions and your comments in the feed. If you're listening to us on Saturday on radio, make sure you guys are tuning in live on YouTube. That's when we record. You guys can watch us do it. You can put your questions in the feed. We're going to answer those for you. Just like Lori just asked, who pushes that rate lock button? Those are things that you guys can do with us. So make sure you go to the YouTube page, you guys subscribe to the channel, and you turn on your notifications so that you know when we go live. If you want to give us a call, you've got questions, call the office. It's not a problem, even though it's Saturday. It's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. And we will make sure that we get an appointment set on the calendar for you to talk with me one-on-one. So go ahead and call the office right now and get that calendar appointment, that phone consultation made. Pam says hi. So, hi, Pam. Thank you so much for watching. I love that the only people that we have watching are my family.
That's all right.
It's all right. I'm just kidding. I love it. But thank you guys so much. So anyway, so guidelines. This is a really, really big one because guidelines have changed tremendously. They're changing every single day. What we can and can't do is changing so fast that we almost can't even keep up. We're trying to keep up with those policies. Heidi, I'm going to let you pull up some of them. I know, do you have two screens going on your computer, or are you going to end up going away and we won't see you?
No, I can move it to another screen, so it might not see me for a minute, but
yeah. Perfect.
I can get those guidelines.
Perfect, because since I'm sitting here, it's kind of hard. I do have some of them pulled up already. A couple of things that I do want to bring up, that with a conventional loan, in investment property, FICO score minimum is 720. This is a giant change. FICO score before on an investment property. So let's say that you want to go and you want to buy your first investment property, single family home, condo, 2 to 4 unit property, and you want to be an investor and you want to buy it to rent it out. We used to have the guideline as of a week ago. I think all of these guidelines actually changed March 27th. So Friday was the last day that you could have actually put in an application, locked the rate, and moved forward with a 640 credit score for an investor. We are now a 720. That is a giant, giant difference. Think about the difference in how much time might it take if you've got a 640 credit score to build that credit score up now to 720. So that is one of the big changes that we're seeing, and we're seeing these changes come in rapidly. Why are we seeing these changes? Why is this happening? Well, it's fear. Nobody knows what is going to happen once this whole pandemic is over. Nobody knows, is the real estate market going to drop? Are the property values going to drop? Is everything going to get right back to normal and business as usual, and we come back with a vengeance, as Trump keeps saying it's going to happen? Nobody knows. It's fear right now. And all of the lenders are scared. They're scared of not being able to sell that loan after they fund it, not being able to get it off of their books, investors not wanting to buy those loans because they've got clients with lower credit scores. So I don't know if you pulled up those changes, Heidi, on your screen. Okay. Awesome. So why don't you give us another one that has kind of rapidly changed?
Okay, so we've got and I'm going to go over like just some overlays that have come over, and overlays are anything above and beyond the normal Fannie Freddie guidelines. So anything that we've put into place, and we have our conventional. So investment property FICO is a 720 as minimum. So that has changed. That's right. Increased.
Yep. So that's what I just talked about. That was a big one.
And then we've got and that was, sorry, I thought you talked about the jumbo one.
Yeah. Nope. Haven't even gotten into jumbo yet. Tons of changes everywhere, all over the board.
My brain's already all over the place.
It's okay.
So the government programs.
Yes. Okay. Let's talk about those.
Huh?
Yeah. Let's talk about those. That's huge.
So these are some big ones. Purchase, so cash out refinances, or sorry, non-cash out refinances,
Okay, so a rate and
um,
term
rate
refinance, you're
and
not pulling
term,
cash out of your home. You're literally just trying to lower your interest rate and get yourself into a better payment.
correct.
Okay?
So minimum FICO score now is a 640, but your debt to income ratio cannot exceed 45%.
Okay. So to put this kind of in layman's terms,
Mhm.
an FHA rate and term refinance previously, we could have gone down to a 580 credit score, sometimes even lower than that.
Mhm.
You could have had a debt to income ratio of 56.9 on your back end debt ratio. They are now saying that not only do your credit score cannot exceed 640, but we cannot go over a 45% debt to income ratio. This is a giant, giant change. And it's because they're scared. Are we going to be able to get investors to invest in that risky loan with that borrower with a lower credit score and with that borrower with a really high debt to income ratio?
Right.
Are they going to make their payments? If you're only buying the home with 3.5% down payment, which is what's required on an FHA property,
Right.
and you have a 580 credit score, and then in the future the property values drop, are you just going to walk away from that house? You had very, very little skin in the game. What is going to
Right.
keep you in that property? What if you're pushing debt ratios to 56.9 and you lose your job? Now there is no way you're going to
There's
be
no
able to
room.
continue to make those payments.
Yeah.
So that's a huge change. That's a big change.
And actually, Debbie, you just brought up a good point, because this is for purchase and rate and term refinance. And then the next caveat is, if you are over 45% debt to income ratio, you have to be at a 680 or higher.
If your debt ratio is over 45.
Over 45.
Okay.
Exactly.
Okay. All right. So
Okay.
those are some big changes. We did have Robert get on and say hi, moms. Hi, Robert. Thank you so much for
Hi,
watching.
Robert.
We appreciate it. Okay. So what's our next change? We've got some big ones. We have cash out. Let's talk about
Yeah.
FHA cash out. Before all of these changes happened, an FHA cash out, again, credit scores could have been 580, sometimes even lower, just depended on the computer system. Debt to income ratio 56.9%, not a problem whatsoever. So give us the new stuff on the cash out.
Cash out, minimum FICO score is a 680.
Okay,
The debt
that's
to income
big.
ratio has not changed
Okay.
as of right now. However, again, the system's going to determine that.
Right. So to put this in perspective, if you have to have a 680 credit score to do a cash out refinance and your debt to income ratio has to be 45%, there's no reason to do FHA. FHA is something that, typically before, even though we had to have an 80% loan to value, we could do those lower credit scores that you could not get yourself in to a conventional loan with a Fannie Mae or a Freddie Mac. So FHA was kind of the saving grace in, we can still do this loan. We can still get you the cash that you need. Once you pay off all of your debts, you're going to be able to improve your credit score. And now, then we'll turn around and refinance you again and get you into a conventional loan to get you out of that mortgage insurance. So that was a big strategy in the past. Now, if you have a 680 credit score and a debt to income ratio of 45 and you've got a loan to value of 80, there's probably not a reason to go FHA. We're going to be looking at a lot of conventional loans at this point. So, conventional, that would be the next cash out, right? So, okay, we're not going to do FHA. Now we're going to do conventional. How has conventional changed?
Hold on, let me get there.
That's okay. I'll tell them where they were before Friday, the 27th, and now and then you could tell us where they are then. So as of before Friday, the 27th, and Saturday might have been the 27th, I don't know, but it was last Friday that everything changed as far as these guidelines that we're going over right now. A conventional loan, you could get into the loan with a 620 or better credit score. A lot of times we'd still go FHA because a 620 would yield you a much higher interest rate. So once we got into 660 credit scores and above, conventional starts looking a lot more attractive and the interest rates start to improve quite a bit. There's significant adjusters to risk in a conventional loan when your credit scores are lower. But we could do a loan still conventional with a 620 credit score or better. And the debt to income ratio could go up to 49% if it was a cash out. So right now, I just want to say we're focusing on refinance cash out with these guidelines that I'm giving you right now. So Heidi, did you find those ones?
No, I don't. I
No?
don't have an update on that.
Don't have an
Sorry.
update? Okay, so
No.
I've got one here that says, let me find it. Um, let's see. These are bond programs. These are all the ones that are changing. But basically, I did read it, and I can tell you pretty easily that it is still a 680 credit score, just like the FHA had moved to. And our debt to income ratio does have to be under 45% for the cash out. So, in essence, basically, FHA and conventional are the exact same guidelines at this point. So again, why would we go? Why would we go FHA? Maybe here's a couple of reasons you might go FHA. Maybe that bankruptcy isn't seasoned long enough to be in the conventional world, but we could get you in the FHA world. Maybe there was a foreclosure that hasn't been seasoned long enough. Foreclosures are a big deal with conventional. If you cannot prove that you had extenuating circumstances behind your bank or your foreclosure, you've got to wait 7 years. And so if you're within that time frame, that might be a reason that we go FHA. So the program is still there, but realistically, we're going to probably start writing a lot more conventional loans than the government loans that we were writing because maybe, things were a little bit more lenient, a little bit more laxed. So down payment assistance. And here these things change as well. We've got another one that got on. I don't know what their name is, but we do want to say hi. It's a NJ. Oh, I think this is Nancy. Hi, Nance. Thanks so much for watching. She says, hi, moms. Anyway, so down payment assistance. And for anybody listening, guys, remember, if you are listening to us on radio on Saturday, give us a call right now. Let us talk to you. Let us go over your situation. It's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. You guys want to tune in Wednesdays live at 5. Check us out. Go to YouTube. Subscribe to the channel. We want you guys to put your questions into the feed, and we want to answer those questions for you. So actually seeing Nancy on reminds me that she had a question that we're going to touch on in a little bit. So I'll read that question. She emailed it to me, and then we'll give her that answer as well. So if you guys are out there and you're listening, give us a call, get a phone consultation set up. And if not, tune in live at 5 on YouTube, search for Mortgage Mom Radio, subscribe to the channel, and turn on your notifications. We want you guys to get those questions into the feed. So we were going to go into down payment assistance. So why don't you go ahead and tackle that one while I pull up Nancy's question that she had emailed to me.
Oh, you're so sweet.
I love it.
Leave this one to me.
All right, well, just tackle it. It's not that hard.
No. Okay.
It's
so
basically gone.
Right now, down payment assistance is, we'll just call it on a pause.
Yes.
So it's not gone. It's just on a pause for now. We don't really know where it's going to go, what's going to happen, but at this time, we are not doing down payment, can't talk. And in my cup is just tea, down payment assistance. So we'll readdress it as we get updates, but effective, Thursday, Friday, we are no longer able to offer down payment assistance.
Yep.
Until further notice.
So, that is something that, we do. We're big on down payment assistance. We love it. We talk about it all of the time. It's we're all about trying to get the people that listen to the show into a home, buying a property, being in real estate, owning something that you're proud of. Down payment assistance gets you there when you've had a really rough time trying to save up for that down payment. Just because that down payment assistance is on pause, as Heidi mentioned, and they are going to reevaluate that on May 31st and then see if that's something we're going to open back up again. But just because it is on a pause doesn't mean that your chances of homeownership are going away. It just means that you might have to start to budget and you might have to try to save up that, down payment. You don't have to have 20% down. That is something that a lot of people don't understand. They think that they have to have 20% down to buy a home. Veterans, you guys can still get in with 0 down. FHA, you can still get in with 3.5% down. We got to get that credit score up. We've got to make sure your debt ratio is in line, but you can still get in with that 3.5% down. Fannie Mae still has 3% down programs as well, 5% down programs as well. The low down payment programs are still there. So we just got to get it budgeted. And the only way for you to do that is to talk to us. Give us a call. Let us work through that with you. Let us help you make that plan and, to move forward and to get there and start to cut out. I mean, right now everybody's on, we're all at home, right? We're not going to Starbucks every day. Hopefully everybody out there is noticing at least a little bit of a change in what their spending habits were on eating out and things of that nature. Maybe that's something that you just have to, continue. You get back to work and you're working really hard, but maybe you continue that and you bring your lunch to work. And, so we'll know a little bit better when it comes to, May 31st and whether they're going to bring that down payment assistance back again. But just because that is gone doesn't mean that your homeownership dreams are crushed. It means that you need to call us and you need to talk to us and you need to let us help you get that game plan to move forward. I can't find Nancy's question. I don't know why. It's in it's somewhere in a million and a half emails. I do remember the basics of it though. So she was asking if we wanted to, if when she's in the middle of a refinance with us right now, and she was asking if she could defer the payments on the mortgage once we close, because everybody's talking about all these payment deferrals and what, the government is doing to help everybody. And Bank of America came out and Wells Fargo came out and said that they would allow you to defer your mortgage for 90 days. And does that mean that once you close on the loan, then you can defer the mortgage? So it was a great question. And it was something that I did want to touch on. And I want everybody to listen very, very carefully. Number one, I found numerous articles about Bank of America was the one, and that the article that I was reading was about. And it was, I can't say that this is 100% accurate. I'm just going to throw that out there right now because, again, it's an article, so we don't know how far that an article goes. But basically what it was saying is, number one, for the banks right now to help you, they have to own your loan. So if they are just the servicing lender, your loan is owned by Fannie Mae or Freddie Mac, they are not the owner of your loan. So basically right now, if they own your loan, and there is no way for you to find that out unless you give them a call, and that's probably not going to be a lot of fun because I've heard that the wait time to call Chase right now and talk to Chase is 16 hours. Whether that is true, I have no idea either. Literally 16 hours, somebody said on one of our conference calls today was what the turn time was to get through to an operator live for your Chase mortgage. So I don't know if that's true, that's not true, but that's the only way to find out. The people that were complaining were saying basically that they did tell them that they would give them deferment, that they would check into it at the end of every 30 days as to whether or not they would defer it out even further. But at the end of that third month, when they get to that fourth payment, that they were going to require that all of those back payments be made. So in very layman's terms, if you have a $2,000 a month mortgage payment and you've deferred 3 of them, and now you're getting to that fourth payment, you may very well have to come up with $8,000. If you can't come up with $2,000 right now today, how in the world are you going to come up with $8,000 in 4 months from now? It's just not possible. So the only thing that I can say to you is nobody knows right now. The government has not come down and thrown down a blanket of laws that say mortgage lenders and servicers, this is how you're going to handle it. This is how it's going to go from here. They haven't done that. They're all trying to do their very best to try to pick up the pieces and figure out what the best way to move forward is. The best thing that you can do right now is continue to make your mortgage payments. Do everything possible to scrape the money together and keep making those mortgage payments. Try not to have to defer them. Try not to miss one. If you miss one, you are going to set yourself up for not being able to get into another loan. Once you miss one, it's going to be that much harder to try to make up the next payment. If you can't make that payment, you have to talk to that servicer. If you call them on the phone, that 800 number on your mortgage statement, and it is a 16-hour wait the 16 hours. You've got to talk to them first, because if you don't, you're not just automatically granted some kind of deferment. That doesn't exist. You could very well be setting yourself up to fail, and you just don't want to do that. So please, if you can continue make payments, make the payments. If you can't make a car payment or you can't make your credit card payment, I'm not saying that that's good either, but call those companies. Those companies own your debt. They are not necessarily just the servicer of your debt. They're going to be able to much quicker tell you exactly what opportunities exist for you and what they can do to try to help you. So, if you're closing on a loan right now and you're employed right now and you're qualifying for that loan right now, once you close your loan, you are probably not going to qualify for a deferment because you were able to qualify to close that loan. Now, obviously, there's nothing that says that we close a loan today and you're working and then tomorrow your company lets you go. That's obviously a different situation. But I don't want anybody to get into a mortgage right now thinking, cool, I'm dropping my interest rate. I'm going to get a better monthly payment on my house. And then as soon as it closes, I'm going to call and try to get 90 days without having to make a payment. You said something really great yesterday on the YouTube, Heidi, and I want you to go over it again. You were saying, you were talking about, not doing it for your checkbook.
Right. Yeah.
So do it again. Say it again. I liked it.
If you're going to defer payments, make sure you're doing it because you can't afford it, not to pad your checkbook, not to pad your savings account, because eventually it will come back to you. You have to make the payments. This is not a forgiveness. This is a deferment. So one way or another, you have to make these payments. And no one knows what this is going to cost you in the long run. So do not just say, hey, I'd feel better if I had an extra 3 months of my mortgage payment in the bank account today.
Right. I would feel better.
On the road.
Right? I mean, we would all feel better if we had that extra cushion. I mean, that's just, that's life. It's reality. It's human nature, right? It feels better when you have a little bit of a cushion there. But you're right, Heidi. You guys have to, if you can scrape it together, all I can tell you, my best advice, mom's best advice is if you can scrape it together, keep paying it. Just keep paying it, because you're going to find yourself in a position that if you did have to pay it back, that you can't. And it's just going to get ugly. It's going to get ugly for everybody. And, that's one person stops making their payment and a foreclosure comes on the market and it just starts to spread like wildfire. Right now, the best thing that we can all do for everybody is try to keep the economy good. Try to keep everybody in their homes. Try to, if you're not losing your home, that property's not going on the market at a discounted price and it keeps, then the neighbor's house doesn't go down in value. I mean, that's how it starts. That's how it happens. And we just don't want to go there.
We think of all the horror stories being in this industry of, I was told if I did a short sale, it wouldn't hurt my credit. I was told by doing this loan modification, it wouldn't hurt my credit. Well, none of that was true. All these people have spent years and years and years trying to come back from that when they thought that was not the case. Right? I'll do a loan modification. Well, they had all these lates and then they modified and some of them got some forgiveness and it's been painful for them, not truly understanding what the future was going to cost them.
Yeah.
And some people didn't have to do it, but they did because it was just a little bit easier financially. Some people did it because they had to, but again, no one really thought what it was going to cost in the future.
Yeah, they did.
Don't do it if you don't have to.
No, and it's haunted them. I mean, we're going to get into jumbo loans too. We're going to talk about those. And, again, I want to throw it out there. If you guys have questions, please throw them into the feed. I would love to answer those for you. So give me a good one. If you guys are listening on Saturday morning, make sure you guys are checking us out. On Wednesdays, we're live at 5 on YouTube. Go to Mortgage Mom Radio, subscribe to the channel, click your notification button. That way you know when we go live. We want to hear from you. We want to answer your questions. We want to read them out loud. And, that's the best way to do it. But if you guys can't watch us on Wednesdays, that's okay. We love you too. Call the office. It's 844-935-3634. We've got, people are answering the phones and we'll get that phone consultation set up one-on-one for you and me to talk. And that's what it's all about. So, no matter what, you're going to be able to get through to us. If you guys want to download the phone app is absolutely amazing. You can get everything that you need right from that phone app. You can call us, you can listen to you can watch YouTube, you can listen to the podcast, you can run payments on a calculator. You can call the office directly from the phone app. And I think I said you can email, but you can email us as well. So if you would like to download that phone app, it's something that is really just to have a tool at the tip of your fingers. It's great. Just text the word mom to 36260. Very, very easy. The telephone number is 36260. And in the subject, where you're typing, you're going to type mom. So that's how you're going to get that phone app, and you can contact us that way as well. Go to the website, mortgagemomradio.com, all kinds of cool tools and advice. YouTube is on there. Podcast is on there as well. And you can reach out to us through there. You can send us an email, contact us. Really, really simple. So we want everybody to reach out. We'd love for you guys to do it in the feed on YouTube on Wednesdays. That way we can read questions out loud and answer those for you. Want to say hi to Chris. Chris said hi. Good. Hello, Christopher. We have a question that came in. It says, this is from Robert. It says, what are rates today, 30-year fixed? So that is a really loaded question and one that is very, very difficult to answer, and obviously not one that I can do here from the studio. So every single person is different. And we've mentioned this many, many times on lots of different shows, but I'll go through it all again for you. Heidi, first thing that comes to mind, somebody says, what would a rate today on a 30-year fixed rate be? What's the first question that you're going to ask them?
Well, I don't know if I have a first question, but I'm going to ask them, well, how much do you owe?
There you go. There's your first question. That's what I mean. So, how much do you owe? What is your credit score? How much is your home worth? Do you include your taxes and insurance in your payment? What county, what state is your property located in? Are you looking for cash out? Do you have a home equity line of credit or a second mortgage against your property? There's so many pieces that go into what is a 30-year fixed rate today that it is absolutely impossible to answer that question on the radio right now or here in a YouTube show. Now, one thing to keep in mind is you guys are going to hear all of these commercials. I mean, I've been watching in the background. I'm working from home and, I've got the TV going in the background, and just about every other commercial break that comes on with the news, and I watch Fox News, is a commercial from a mortgage lender, and I don't even know which mortgage lender it is, but it's a commercial from a mortgage lender, and they're talking about call right now to get your VA IRRL, your streamlined refinance for your VA loan at 2.875. How in the world can they do a commercial that they're offering an interest rate that, number one, doesn't exist right now because interest rates have just been all over the board, but number two, they don't know anything about you. Your credit score is going to change that interest rate. Your loan size is going to change that interest rate. There's so many things that are going to go into what that interest rate is that it just floors me to hear these commercials on radio, hear these commercials on the TV. So, Robert, we'd love to answer that question for you. Absolutely. I'd be more than happy to do it. All you got to do is give us a call and, get on my calendar, and me and you are going to talk one-on-one about your scenario, and I'm going to tell you exactly where interest rates will be. So, again, and look at, actually, he just put it right in the feed. I'll call you. I love it. That's what we want. That is absolutely perfect. But everybody out there listening, guys, we want you to call us. So it's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. You can go to my website and you can put in an inquiry. There are, interest rate inquiries on there. It's going to ask you a bunch of questions. It'll send an email over to me, and I'm going to reach out, schedule an appointment, and we're going to talk about you as well. So however you feel most comfortable reaching out, we want you to do that. But get on the calendar. Let us schedule that appointment with you, and let me go one-on-one with you just over the phone about your scenario and what those interest rates look like. So going back to, okay, here we go. Okay, well, this one comes from Pam, and she says, what do you expect from Fox? We'll leave it at that, but that's a really fun one. I love it. So again, everybody listening on Saturday morning, you guys should be tuning in Wednesday live at 5 on YouTube. So check us out. Find us, Mortgage Mom Radio. Subscribe to the channel and click your notification button so that we can get more comments from you that we can read out loud. We can read your questions out loud, and we can answer those for you. Okay, so getting back to guideline changes, because that's what's going on right now. Look at her. She can't even stop laughing. I love it. She says that, and then all I can think about is, Trump just absolutely just going off about CNN. I was watching that one the other day too, and that was pretty funny. He just absolutely cannot stand CNN. And obviously we're so busy working so hard, so many hours a day, that we don't watch a lot of news. It's kind of like the first time that I'm working and I'm hearing the news in the background. So I'm not up to date on what Trump's issues with CNN are, but, very interesting. Anyway, very funny. I love it. So let's get to it. So changes, underwriting guidelines, everything's changing. The mortgage industry is changing. Should you make your payment? Yes. Are you going to get your payment deferred? Maybe not.
Who knows?
Yeah. Cash out refinance, FHA or conventional. You need to have a 680 credit score if you want to pull cash out. So that is a brand new guideline that is very, very important. If you are furloughed, we'll talk about jumbo in a minute, but if you are furloughed, if you are laid off, here's some very important stuff that we do need to talk about because this is big. If you are laid off and you are in the middle of your loan with your loan officer, call them immediately.
Please.
Please. We cannot close your loan unless you have more than one person on the loan and your spouse's income who is still working is enough to qualify you for the loan. If you lose your job, laid off, we cannot close your loan. So you have to call us immediately. The last thing that you want to do is stay quiet. Your loan, you got something that said your loan was approved. Remember, guys, that is a conditional approval. Every single lender is going to verify your employment prior to closing, prior to funding that loan. It just got harder. We used to verify your employment 10 days prior to funding. We are now verifying your employment 5 days prior to funding and 2 days prior to funding. So you are getting your verification of employment checked over and over and over again. You have got to let your loan officer know. The last thing that you want to do is pay for an appraisal, have the appraisal ordered and completed, and you had not been working and you get to the end and you're ready to close and you find out you don't have a loan. So that is very important. Furloughed. We've gotten this one quite a few times, and I think that there's a misunderstanding about being furloughed. If you are furloughed, you are still an employee of the company, and we understand that. But we don't know when you're going back to work. We don't know what that return to work date is. You are not currently earning income. Now, there are a lot of companies that are keeping you on payroll, that are continuing to pay your salary, even though you are not working. That is absolutely fine. But if you are furloughed or laid off and there is literally no income coming in, there is no way for us to count that income towards your qualifying debt ratios. So you've got to call your loan officer immediately if that happens to you. Furloughed is really hard, but my company is paying me 80 hours of sick time. Then they're letting me cash out all of my PTO. And by the time I get all of that income, we're going to be back to work. You know what? You probably will be. And that doesn't mean that we have to cancel your loan. Let's say you're a refinance or let's say you're a purchase. Maybe we need to put it on hold. You need to reach out to your real estate agent immediately. You need to tell your real estate agent what the problem is. The real estate agent needs to try to get that escrow extended until everybody is back to work. If you work retail and things are closed, we've got to get it extended. Trust me, you're not the only person in that position. Hey, sellers, you probably don't want to kick that buyer out of this transaction if you could just extend it a couple of weeks to get it closed. It's going to be harder to get the property relisted for sale during a time that it's very difficult right now for buyers to get out and actually tour your home. So, there's things that we can do. We don't necessarily need to cancel it and it's just gone, declined, but we're going to have to figure out how to get it extended out until we can verify that you are back to work. Did I miss anything on that, Heidi?
I just want to add, there are a lot of people out there that are still employed, but their hours have been cut. Their pay has been cut. So in those cases, you would still have to qualify on the income you are getting today, not the income you got yesterday. So I want to be clear on that because we do have some people that are like, well, yes, I'm still working. But if you have received a 75% pay decrease, yes, you're still working, yes, you're still employed, and that's fantastic, right? Something's better than nothing. But if you cannot qualify on that 25% you have left, we cannot close the loan. Mm-hmm. So I just want to be clear, it's not just employment. You have to be able to qualify with the income that you are receiving today.
Correct. Good one. I like that. See, that's why I have you on this show. You're amazing. Okay. So again, you guys, you have questions, give us a call. It's 844-935-3634. Get yourself on the calendar to talk to me one-on-one. We'll do a phone consultation. We'll talk all about you, your income, what's going on, your interest rate right now today. You want to talk about a refinance. You want to talk about a purchase. Just give us a call. It's 844-935-3634. You guys can go to the website, mortgagemomradio.com, or download the phone app, which is amazing. It does everything that the website does. Text the word mom to 36260. You guys want to ask us some questions, you want to watch us record live, make sure you go to YouTube and subscribe to our channel, Mortgage Mom Radio. Turn on the notifications button so you know when we go live. We're doing this every Wednesday. We are live at 5. That is 5 p.m. And we want to see you guys ask us those questions and put them in the feed. So, underwriting guidelines. I mean, this is like a big one. There's so many changes this week. Underwriting guidelines. What else is happening? Okay, so we've got our jumbo world. Do you happen to have those pulled up on the calendar, Heidi? No, I'm sorry, not the calendar. Your computer? No,
No, I
it's
closed
okay.
my email, but I can pull them up.
Yeah, that's okay. If you can, try to pull them
It
up.
just kept dinging, so.
It's all right. I actually have them here. So we got this list. This is actually pretty interesting, and I'm going to actually read it to you. So this was effective end of business day, 8 p.m. Eastern Standard Time, March 27th, 2020, for all new applications and new lock requests. The following programs will be paused temporarily through May 31st, 2020, or until further notice. So again, they're leaving that kind of open because we don't know how long are we going to be on hold. We don't know when everybody's going to get back to work. And once everybody is back to work, we don't know if everything's going to come running back with a vengeance, or are we going to be on this really slippery slope of, recession? We just don't know, right? So immediately, all bond programs. What are bond programs? We talked about that a little bit earlier in the show. That's the down payment assistance programs. And it goes through all of the different programs that have been eliminated from our bond loans. And it starts with Alabama and it goes all the way through whatever the, furthest down on the alphabet is in, the country. I mean, we're in basically every single state. I think we're in 49 states with Movement Mortgage. So those gone. Okay. Next one is, we have jumbo lenders. We've got numerous jumbo lenders. So everybody that's got a loan amount of 5, 10, 400 or higher in most places, high cost areas like LA, San Diego, Orange County, those are going to have a little bit higher limits. There's a lot of states, Chicago, there's a lot of other states and cities that do have high balance limits that go to higher loan amounts. But for the typical in the United States, the conforming loan limit for Fannie Mae, Freddie Mac is 5, 10, 400. When you go over 5, 10, 400, you're considered a jumbo loan. And us as a mortgage bank, we've got tons of lenders that we work with. We've got, AIG, we've got Lakeview, we have all kinds of programs, Bank of America, JP Morgan Chase, which is different than JP Morgan. We've got Goldman Sachs, we've got TIAA, we have Citibank, we've got, you name it, there's a bunch of them. We got Redwood Trust, and I could just keep going down this list. As of that day, those programs have all been kaput. They're on hold. So we have 2 programs right now that are still available. One I know 100% for sure that we can do with jumbo, which is Wells Fargo. Wells Fargo has not cut off the acceptance of new mortgage applications in the jumbo world. What they did do, though, is they lowered the loan to value guidelines. So before with a jumbo loan, where typically on average, you needed to have a 20% down payment or more. And there were programs that you could do less than 20% down. I'm not saying that didn't exist. It did. But on average for, the basic person listening, 20% down payment was required on those jumbo loans. They have now actually increased that. So you need to have a bigger down payment than what you needed to have before. I believe it was Chase was the other one that we still have that line of credit rolling with. Yes. Are you giving me the question? Yeah.
Yes.
Okay. You guys can't see her if you're listening on Saturday, but if you're watching on YouTube, you'd see her head shaking yes.
I forget about that.
Yeah, they can't see you shaking your head on radio. So we've got Chase and Wells Fargo that are still accepting applications, but loan to value guidelines have changed. So if you've been in the jumbo market, you've been in the jumbo world, you've been thinking about buying a home, you thought you were going to put down 20% or less, first thing you guys need to do is pick up the phone, call your lender or call us, get on the books, get a consultation, talk to me. I'll let you know exactly what you can do. Jumbo lending has changed. There's just no way to get into all of these guidelines. I'm going to guess that debt to income ratios were probably also reduced, just like FHA and conventional were. So just get on the books, just call us and, let us talk to you. We'll pull up what you need to know for you and your situation. Or if you've already been pre-approved, make sure you call your mortgage lender, make sure you call your loan officer and find out what they've got going on.
And Chase is no longer taking our investments.
So no more investment properties.
No.
Okay. Well, which makes it tough. You're in the jumbo world. You're trying to do an investment property. As it was, Wells Fargo had already had a really large down payment requirement on those. So again, if you've been thinking about possibly doing a jumbo loan of some sort, you need to get on the phone and you need to call your loan officer, or you need to get on the phone and call us. So it's important to know what your opportunities are. Okay. So that was one email, and there was a lot of changes in that email. Then we had another email. Then we had another email and another email. There are tons of changes that are happening right now, which is basically what we're trying to tell you and where we're trying to go with this show. What you guys can do, number one, do we think interest rates are going to come back down again? Probably. What's the best thing that you can possibly do? Get that application started. Get it in the system. Get the appraisal ordered. Get the loan approved. And be patient. Be ready to lock in when those rates come down. Because from everything that we are hearing, everything that we are reading, and everything that the financial analysts are anticipating is that once everything does calm down, and everything does come back, and everybody's back to work, and everything's hustling and bustling again, that those interest rates are going to come back down. And that is going to be our opportunity, yours and mine and Heidi's, to get you at the front of the pack. Your loan's in, your loan is approved, your appraisal is completed, and now we're locking your rate and we're going to docs, literally, rather than being behind the pack of everybody else that is now trying to jump on the bandwagon, get that refinance started, and it's going to take them 45, 60, 90 days to close. Just have patience and understand that we're going to put you in that loan and we're not going to lock you in right away because we're going to wait for that to come down. If you're in a situation that you need cash out right now, we get it. And you know what? It's a great time to call us. Why? Well, question marks are in our future, right? We don't know where property values are going. We don't know if we're going to end up in a recession. What we do know is that the values that we have today, appraisals that we're going to get today, are based on the homes that are in escrow today. The homes in escrow today went into escrow prior, the majority of them. There are some that are still going into escrow. We actually just had one this week where the person just opened up escrow, but literally it's been difficult. First, the realtors were told that they couldn't show property, that they weren't considered essential business. Now they're being told that they are essential business, but depending on their brokerage that they work for and the company that they work for, they're either having to do virtual showings or they're they can't hold open houses. Things are slow in that arena, period. So the amount of homes going into escrow right now is definitely limited. The homes that are in escrow right now that are closing were the majority prior to this pandemic and everybody getting told stay at home. So property values are still high. We haven't touched anything yet. We haven't seen what's going to happen at the end of this shuffle, right?
Right.
So if you've thought about pulling cash out, you need to have equity in your home to pull cash out. Rates are still very good. I'm not telling you rates are bad. Rates are still very good. You can still get a very, very decent rate pulling money out of your home. Are they where they were on March 9th? Are they at 3%, 3.25%? No. Are they still around 4, just under, just over? Yeah, they're still great. So, if you've been thinking about pulling cash out of your home, it is still a very good time to do it. So get on the phone and give us a call so that we can catch things while property values are up. We don't know where they're going to go. We're hoping everything's just going to come roaring back and we're not going to see those property values drop. And if we do, that's okay. That leaves so much opportunity for so many people to buy homes. It's still, there's nothing wrong with this business, right? It's an exciting business. We're giving people opportunity all of the time, but that would be one where we don't want to wait to lock you in. We just want to get you rolling and we want to get you closed. But maybe you just really want to grab that lower rate. You want to lower your monthly payment. You're not worried about getting cash out. You're in absolutely no hurry, no rush whatsoever. You're still working. You still got your job. I'm telling you right now, let's get that application in because we want to get ahead of the curve before all of those rates do start to come down. Do you got anything to add to that, Heidi?
Yeah, I say a lot of people are worried, like, should I not? What if my value drops? Well, if you love your home and you plan on staying in your home, it doesn't matter. If you can afford your payment, you're going to stay in your home. Values are going to go up. They're going to go down. They're going to come back up. So if you planned on staying there, don't panic.
Right.
You don't need to jump out of your house because the value went down. The value is completely irrelevant if you're living in your home and you can afford your payments and you didn't plan on selling it anyways. Just write it out. The value will come back up. And when you do plan on selling it, which wasn't today anyways, you'll be in a good place. So don't panic. Do what you thought you should do, whether it be taking cash out or you're just looking for a better rate. If that better rate is available today, do it. If you need cash today, do it. Don't worry about whether or not your value is going to be there tomorrow because you weren't selling tomorrow.
Right. Right.
That's all I've got.
And that's all that we've been saying on this show since day one is, you know what? Plant your roots. Real estate is for the long haul. It's very, very important to, love your home. You've got your tax advantages of being a homeowner. You've got a place that nobody can tell you to leave. If you stop making those mortgage payments, you could get foreclosed on. And that's the only way somebody's going to be able to tell you to leave, right? So, the moral of the story is just keep making the payments. We mentioned at the beginning of the show. If you missed that, go back and listen to it. If you guys want to find it, you can find it on podcast. You can find it on YouTube. If you're listening on Saturday and you just got in your car and you only picked up a piece of the show, we talked all about the payments and deferring the payments and everything that is happening right now. But by all means, if you guys can keep making those payments, keep making them. Keep making them. And this is your home, like Heidi said, and this is where you live, and this is your security blanket. And if you can afford that payment, which I'm going to tell you, we're not going to see the craziness we saw in 2008. We just are not. It doesn't matter what recession that we get into. Will there be people lose their jobs? Yes. Will there be people lose their homes? Yes. If we get into that recession. If. And that's a humongous if. But what you have to remember is that since 2008 and all of the errors that were made leading up to 2008, every single client that we have, for the most part, has had to qualify for the loan that they have in full. W-2s, pay stubs, tax returns. So we have put people into homes that they can afford to pay. So if they can afford to pay the home, there's no reason to walk away from their property just because property values drop. So the hopes of the fact that we did it right this time, the mortgage industry did it right. I mean, if anything, we all hated the CFPB. They came in and they said, you can't do this, you can't do that. But at the end of the day, they were there for the consumer. And they did it right. And they made sure that we gave loans to people that could afford the loans. So really the hope this time is we just come roaring back and everybody does get back to work, and we might see some losses, but we're not going to see as big of losses. We just aren't. We really aren't. And I think it's going to be good. I think if property values do come down a little bit, it's going to maybe open up some opportunity for some people to purchase, maybe that felt like they were priced out of the market. There's absolutely nothing negative that is going to come from really any of this. We've just got to keep that positive attitude and looking forward. So anybody out there listening, you guys want to give us a call, please feel free to do so. Get yourself on my calendar to talk to me one-on-one. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. That is LEND and the number 4. So 844-WE-LEND-FOR-YOU. I'd love to see you guys get on Heidi's calendar because, I wouldn't have to take as many phone calls then. So if you guys want to ask for Heidi, ask for Heidi. And again, they can't see you throwing your finger up. You got to talk, Heidi.
Everybody wants to talk to Debbie. I recommend her as number 1. So get on Debbie's calendar. I'm happy to talk to everyone, which I always do after you talk to Debbie. So I'm just saying, if you want the best, talk to Debbie.
Talk to Debbie.
Otherwise, I'm totally willing to have a conversation, and I would love to speak with all of you as well.
Absolutely. And we'd love to see you guys all on our YouTube next Wednesday. We are live at 5. That is 5 p.m. Go to YouTube, look for Mortgage Mom Radio, subscribe to the channel, click the notification button so you guys know when we go on live. We want to see those questions come into the feed. We're going to read them out loud, and we're going to answer them for you. So make sure you guys are following us. Get on next Wednesday. We'd love to see you on. And I hope you guys have a fantastic weekend. That's it. It's game over, huh? It was a great, it was lots of information. And if you guys heard something that you don't understand or you want to know more in detail, please call the office, get on my calendar. I'm going to talk to you one-on-one and we'll get you guys through it. So we hope you guys all have a fantastic rest of your week. For those on radio Saturday, hope you guys have a fantastic weekend, and we'll be back next Wednesday.
Everyone stay safe.
Stay safe. Bye-bye.
Bye.